Welcome back, Laura.
Thank you.
To the Monica Show, where we discuss all things real estate in Auckland. Now, you are the mortgage expert, and what are we doing with principal or interest-only loans
Yeah, good question.
for property investors?
Yes, good question. Again, not a one size fits all, but I'll talk to the general principles and then we can get more specific on like what that looks like for individuals. So 9 times out of 10, you will find that property investors still have debt on their personal home, and that's more than likely because they've leveraged against that property as a deposit to buy their investment property.
Yes.
So there's still like an element of debt on their owner occupied. You should always focus on paying down the debt on your home first, just because it's more risk for you. You know, if you're defaulting on your mortgage on your home, do you really want to get into like mortgagee sales and be evicted from your house? No. So always good to focus on paying down the debt on your home first. If you've still got debt on your home, 9 times out of 10, it makes sense to put your investment property lending on interest only for a couple of reasons. A, it allows you to allocate more of your cash towards paying down your home loan debt faster, and B, just from a cash flow perspective. What you'll find, especially in this market, while interest rates are still quite high, you're going to have to be topping up your mortgage repayments. Like the rental income isn't enough to service the mortgage repayments. So there's an element of topping up from your own funds. On interest only, your repayments will be lower than if you were on principal and interest. So the gap between rental income and mortgage repayments would be less on interest only. And again, that just kind of helps you divert the extra cash to your home loan and then a smaller top up on your investment property. If you are in a lucky enough position that you don't have any debt on your home and you've just got investment property debt, then again, it comes down to what your plans are for like the future, your cash flow, how well your investment properties are performing. Like, is the rent actually high enough to service the mortgage, all of the rates and insurance? If it is, then that lending can quite easily be on principal and interest. You're making good headway at paying that debt down. And the benefit of that is that over time, we would expect your properties to grow in value. Your balance is consistently coming down, and therefore you've got more usable equity kind of building up, which allows you to then move on to buy your next investment property. So it is a bit kind of situation dependent. Like
Also, age, kind of where you are, at in life, kind of plays a part as well, right?
Again, a lot of people have this idea of interest only. Oh, we just chuck it on interest only for 5 years, 10 years, which can be great in the early years whilst you're kind of managing that cash flow and interest rates are still quite high. But what you have to remember is if you take the lending over a 30-year term and you've got 5 or 10 years of interest only, that's only giving you 25 or 20 years after that period of time to repay the whole loan. In which time your repayments are going to be higher because you're paying it off over a much shorter period of time.
Oh, I didn't think about it that way.
Yeah. For as long as the loan's on interest only, you're not actually chipping away at any of that balance. You're literally just covering interest costs. So when a bank is assessing if they will approve interest only, they are looking at all of those things. So how old are you? Is it your sole investment property? Do you have a couple of investment properties? Because eventually you will get to a point where you will sell 1 or 2 of those properties, use the sale proceeds and pay the debt back that way. If you literally only have like your own home and 1 investment property, your ability to kind of sell assets and repay the debt that way is a bit more limited. So they're saying, okay, can you still afford to service this mortgage over a 20-year term rather than a 30-year term if you've had like a 10-year interest only period? So it does make sense for a lot of investors to have interest only, and banks are way more inclined to approve interest only on investment properties versus your main home. But it's still worth kind of having that consideration. And do you really need to have it on interest only? Is the cash flow sufficient enough for you to have it on principal and interest and just kind of service those higher mortgage repayments?
Cool. Thank you, Laura. That was very insightful. Especially, you reminded me that if you still have mortgage on your family home, then perhaps you should focus on repaying down those first.
Yeah,
That's a really good guideline. Thank you.
Thank you.